The year is 2030. You're re-sipping your morning coffee while checking out the latest on your personal news feed. The stock market is up today, but it's only a minor blip on your radar. Your attention is captured by something much bigger. A decentralized autonomous organization has just launched a new DeFi protocol that allows users to borrow against their crypto assets. The rates are fantastic and there are no credit checks involved. So you connect your digital wallet and start exploring what this new opportunity has to offer. Welcome to the future. Okay, now wake up because this is happening right now. Cryptocurrencies are more popular than ever. They are being accepted by major companies like PayPal, and even some governments are experimenting with their own central bank digital currencies. But what does it all mean? If you want to get ahead of the curve, you need to know exactly how crypto works. What is up, my friends? Welcome back to our channel, The Know. One place for the latest and greatest in tech and digital content. Now let's get started. If you ask me, the crypto revolution is here. It may not look like the cyberpunk future some people envisioned, but cryptocurrencies are changing the face of finance, and they're doing it fast. In fact, the growth of the crypto industry has been nothing short of astounding. Since its inception in 2009, the total value of the crypto market has skyrocketed from virtually zero to over $2 trillion. And with big players like Tesla and PayPal investing in crypto, it's clear that this trend is here to stay. But before we can really appreciate the magnitude of this change, we need to understand what crypto is at its most basic level. Cryptocurrencies are digital or virtual currencies that are designed to work as a medium of exchange. They leverage cryptography for security, which is why they're called cryptocurrencies. Most cryptocurrencies are decentralized, meaning that they operate independently of any central bank, government, or other financial institution. This decentralization makes them attractive to those who are looking to move away from traditional financial systems and transact directly with each other. Now that we've established the basics, it's time to dive deeper into the world of crypto and explore what makes it so special. One of the biggest buzzwords in the crypto space is decentralized finance, otherwise known as DeFi. At its core, DeFi is all about creating a more open, accessible, and efficient financial system using blockchain technology. Instead of relying on traditional intermediaries like banks, DeFi allows individuals to transact directly with each other through smart contracts. These agreements are stored on a blockchain, which provides a secure and transparent way to exchange value. There are many different applications of DeFi, but let's explore a few of them in more detail. First, DeFi makes it possible to lend and borrow money without going through a bank. When you deposit your funds into a DeFi protocol, you're essentially lending it to someone else who needs it. In return, you receive interest payments based on the amount you lent. Similarly, if you need to borrow money, you can do so by putting up your crypto assets as collateral. This process is known as over-collateralization, and it ensures that the lender is protected in the event that the borrower defaults. The beauty of this system is that it's available to anyone with an internet connection. You don't need a credit check or a bank account to get started. And because transactions are processed through smart contracts, they're much faster and cheaper than traditional methods. Speaking of speed and cost, another great thing about DeFi is that it eliminates the need for middlemen, which reduces fees and speeds up transaction times. For example, instead of paying a bank to transfer your money, you can use a DeFi protocol to do it yourself at a fraction of the cost. And because these platforms operate 24/7, you don't have to wait for a bank to open to make a transaction. But it doesn't stop there. DeFi also promotes financial inclusion, meaning that anyone in the world can participate regardless of their background or location. This is especially helpful for people in developing countries who don't have access to traditional banking services. By leveraging DeFi, they can still participate in the global economy and build financial stability for themselves. Alright, so we've talked about how crypto and DeFi work, but what does it all mean for the future of finance? Well, it's clear that cryptocurrencies are changing the game when it comes to investing, according to a recent report by the Bank of America. Millennials and Gen Z investors are increasingly allocating a portion of their portfolios to crypto. In fact, nearly 1/3 of millennials said they owned crypto, compared to only 10% of baby boomers. This shift is largely due to the growth of the crypto market itself, which has outpaced traditional asset classes in terms of returns. Since its launch in 2009, Bitcoin has grown by over 13 million%, far outpacing the S&P 500's best year, which saw a gain of 37%. This impressive growth has made crypto an attractive option for investors looking to diversify their portfolios and potentially increase their wealth. But it's not just the high returns that are drawing people in. Many investors are also interested in the underlying technology behind cryptocurrencies, blockchain. This distributed ledger technology offers a secure and transparent way to track transactions and could potentially revolutionize many industries beyond finance. As more people learn about blockchain and its potential applications, it's likely that more will jump on the crypto bandwagon. Of course, it's important to remember that investing in crypto carries its own set of risks. The market is highly volatile, and prices can swing wildly in a short period of time. Additionally, there are many scams and fraudulent activities in the crypto space, and it's important to be cautious when investing. Despite these risks, the potential rewards are too great to ignore. Cryptocurrencies are becoming more mainstream by the day, and with the right knowledge and preparation, investors can position themselves to take advantage of this exciting new market. As we look to the future, it's clear that cryptocurrencies are here to stay. They've evolved into their own asset class and are now an integral part of the financial ecosystem. But what does this mean for the future of finance as a whole? Well, it's likely that cryptocurrencies will continue to disrupt traditional financial systems and push the industry to innovate. As blockchain technology matures and becomes more widely adopted, we can expect to see more applications emerge that make financial services more accessible, efficient, and affordable for everyone. But it's not just about finance. Blockchain has the potential to revolutionize many other industries as well. Supply chain management, healthcare, and digital identity are just a few areas where blockchain could improve transparency, security, and efficiency. As we continue to explore the possibilities of this technology, it's clear that the future is bright for cryptocurrencies and blockchain. However, there are still challenges to overcome. One of the biggest hurdles to mass adoption is the regulatory landscape. Governments and financial institutions are still working to figure out how to best regulate cryptocurrencies and blockchain technology. There are concerns about fraud, security, and consumer protection that need to be addressed before crypto can be used by everyone. Additionally, the environmental impact of mining, which is the process of verifying and adding new transactions to the blockchain, is a hot topic of debate. Some argue that the energy used in mining is wasteful and unsustainable. Others argue that the benefits of blockchain outweigh the costs. As we move forward, it'll be important to find a balance between innovation and sustainability to ensure that cryptocurrencies and blockchain technology benefit everyone. So what should you take away from this exploration of the world of crypto? First, remember that cryptocurrencies are here to stay. They've evolved into their own asset class and are an integral part of the financial ecosystem. Second, recognize the potential of blockchain technology. This technology has the power to disrupt many industries and improve our lives in ways we never imagined. And third, stay informed. The world of crypto is constantly evolving, and it's important to keep up with the latest trends and developments. I hope this video has helped to demystify the world of cryptocurrencies and blockchain. It's a complex topic, but it doesn't have to be overwhelming. By understanding the basics and staying informed, you can make your own decisions about whether crypto is right for you. Whether you're a seasoned investor or a curious beginner, I encourage you to explore the world of crypto and see what it has to offer. Who knows? You might just be a few clicks away from making your first investment or launching your own business. Before we go, I want to hear from you. What are your thoughts on the future of crypto and blockchain? Do you see them as a disruptive force for good, or are you skeptical of their potential? Let us know in the comments below. And that's a wrap for this episode, my friends. If you enjoyed the content, please don't forget to leave a like and subscribe to our channel for more updates. Catch you in the next one.